Okay, today we're going to record and we're going to talk about a new system for accounting. And we're going to add two new pieces. They are called debits and credits, and we're going to use them in a new system. Instead of doing the old spreadsheets that we've had, we're going to do these in T accounts. Okay? And what I've had you do so far is I've had you write out the equation and then make a nice T to go with that equation. All right, we're going to start segmenting things, and it's going to make recording information or transactions easier, in my opinion. But you got to understand the procedures and the rules of accounting before you can do it correctly. And they're pretty simple. Your brain is going to try and make you make this more complex. It's not. Okay, so I'm going to give you the first two rules. Number one, debit means left. All right? Now you can write that down if you want. We're going to do some things to prove it. But debit means left. It means nothing else. You guys have heard of a debit card and those kinds of things, correct? Yeah. It has nothing to do with a debit card. And don't even consider, if you see something debit regarding your bank account, ignore that. It doesn't have anything to do with that. Debit in a banking situation is different. Okay, from a business perspective, debit means left. Okay, that's it. Questions about that?
Wasn't a debit card like all that you have left in your bank account?
Different kind of left, though. We're talking about left side, not what is left. Okay, so debit means left side. Everybody good with that?
Yes.
All right, so the opposite, there's an opposite of a left side. It's the right side. That is credit. Credit means right. Okay? So your first two rules. Debit means left. Credit means right. Okay? Now the next thing, the third rule we're going to talk about, every debit equals every credit. Every debit equals every credit. So when all else fails, when you're recording some transactions today, or we're going through this process, if you know what the debit is, you should be able to figure out what the credit is. Maybe you're not sure it should be that, but if you know what the account is for sure, like you know it's cash, you don't know whether it's debited or credited, but you debited the other thing, well, cash has to be credited. Because for every debit, there's an equal credit. Good? Okay, let's show you how this breaks down now. So we're going to use T accounts, and this is a real tool that accountants use in today's world to break down how accounts are represented in an accounting equation. Okay? And how they mix and match with other accounts that occur. So what's the most common asset account that we deal with? Money, which is also called? Cash. All right, so here's what I want you to do. Underneath your equation on the asset side, the debit side of the equation, you're going to make a T account. Looks like this. Looks like a T. That's why they call it a T account. On top of the T account, you're going to put the title cash. Write the title cash. Which side is the debit side?
Left.
Why? Because debit means left. Yeah! We've already got it down. I like it. All right. Debit side. All right. What's the credit side? The right side. Because we said credit means right. I know. Really tough concept here, right?
Right.
It is. Yeah. Credit. Credit. Credit on. Right on. Yeah. It gets worse, trust me. All right. So now some extra rules to go with this in your T account. For assets on the debit side, that is also known as the increase side. So we're going to put a plus symbol, and we're going to write the word increase, just so you know what that means. Some people might try to confuse it with something else, like first aid or something. Okay. The other thing you need to know about the debit side of an asset, any asset, we're just happen to be talking about cash, any asset, this is also known as the normal balance side. Now, I like using cash for this initial introduction to this because can you have, if debit is the increase in the normal balance side of cash, can you have negative cash?
Yes.
Is that physically possible to have negative cash in your hand? No. No. Even if your mom tells you that your money is burning a hole in your pocket, that doesn't mean you have negative cash.
Well, it's like you're holding a diploma. They have a lot of stuff.
Well, then it would go into liabilities, wouldn't it, if you had debt? Yeah. So it wouldn't be negative cash. Okay. So if we know this is all the increase side, on the other side of assets, the credit side is where it decreases. So you can put a minus and you can put decrease. Okay? All right, any questions about that in particular? Pretty straightforward, isn't it?
Yes.
Pretty simple? Okay. So, I want you to make a prediction for me. We're going to go make a T account over here. That takes care of our assets. Let's do liabilities next. What's the account we use for liabilities? Anybody remember? Thank you, Scott. Accounts payable. I'm just going to abbreviate accounts pay. Which side's the debit side? Left side. Because that's what it means, right? Which side's the credit side? Right side, because it's credit means right. Okay. Based on what you know about assets. You're okay. Based on what you know about assets, then looking at this, we're going to go to the other side of the equation. Other side of the equal sign. What can you predict increase and decrease wise on liabilities?
Credit increase.
Hayden says credit increase. Why?
It's the right side.
Because it's the right thing to do?
No, it's the right side of liability and assets. Liabilities over here.
So since we crossed over the equal sign, you think it's the opposite? Okay. I agree. And I think that's a good initial thought. So plus increase side, this is also the normal balance side. Minus is the debit. You can also write decrease. That's for liabilities. Okay, good. So we have one more classification to talk about. That goes for all liabilities, by the way. Owner's equity. What's the account we use for owner's equity? Owner's capital. Put your last name in capital. I'm going to put Zimmer Capital for mine. Take ownership. Haha. No, that wasn't a good one. Okay. Okay, what can we predict about owner's capital? Increase and decrease, debit. What's the debit and credit side, first of all? What's what? Left is debit, because debit means left. That never changes. Debit is always left. Credit is always right. Okay? Now, increase side, somebody besides Hayden. Even though Hayden gets it. Somebody take a chance. If for no other reason to not make my video go too long.
What's the question?
Which side's the increase side of capital?
Credit.
Why credit?
It's still on the right side of the equal sign.
Because it's still on the right side of the equal sign. He's exactly right. It has the same impact. It's on this side of the equal sign. Same rules for both of these. All right? So, increase side. Normal balance as well. decrease sign. Okay. Everybody understand how that works? So right now, as it is on your table, as you see it, I want you to take a picture of what you have. Okay? And if you're watching on the video, you may have to zoom in, but you can look at that and see this is going to be your cheat sheet. Okay? We'll make another version of this later, but for today, to have a little bit more fun and not just get stuck on the computer all the time because that can get monotonous, I'm having you draw it on your table. Okay? So we're going to do some practice transactions. I'm going to pause the video, close it down for now. And when you come into class tomorrow, we'll do some practice transactions with you too. But this is all you needed to know from today's lesson, so I'm going to cut it here. We'll see you tomorrow, those of you who aren't here.
Make sure you hit that subscribe button.
Yeah. Yeah, go to my channel, hit subscribe.
Bring that bell.